Hello and welcome to Ask Ela, the Print's new weekly show on the economy. I'm joined by Professor Ela Patnaik, who, as you all know, is a well-known economist and a professor at National Institute of Public Finance and Policy. Please do send in your questions, and I would be happy to ask them to Ela. Last week the Reserve Bank of India announced a series of measures to support some key segments of the economy. This included a 50,000 crore special liquidity facility for the healthcare sector, including vaccine manufacturers, hospitals, uh, pathology labs, even those patients who are looking to seek treatment for COVID. And the Reserve Bank of India also announced a series of measures for individual and MSME loan restructuring. What does all this mean for the economy? And does the RBI and the government need to announce further steps to support the economy? We'll ask all these questions to Ela today. Ma'am, I would want to start by asking you, the Reserve Bank of India has given incentives to banks to provide, make a COVID loan book. Do you think that it would be enough to overcome the risk aversion that we've seen banks, face so far?
See, it's very hard because while interest rates might be lower, but banks looking for recovering their loans at a time when the uncertainty is high, when business conditions are very difficult, the banks may not take that risk. And as you say, it may not be enough to overcome the risk aversion that we've already seen or that we may continue to see. And the second thing also is that even companies, we did not see a lot of companies come forward and do that restructuring because I think that affects their creditworthiness in the future. And so very few came up and did the kind of restructuring that they perhaps could have. So whether you'll get new loans at a time like this, whether you'll get a lot of restructuring done of MSME loans, it's very difficult. It's very, very difficult at this time.
One would see the fine print of the RBI's notifications and would say that probably someone like a vaccine manufacturer may opt for this kind of a window. Probably some hospitals who are looking to set up some kind of a temporary additional capacity. But do you see a wider range of healthcare providers taking this kind of a loan?
So I think the healthcare business, if you think of it as a business, as a business whose demand has increased phenomenally, would actually be one sector that could actually borrow, because it is at a stage where if it did not expand capacity, it would be losing out. So we could perhaps see the healthcare sectors, whether COVID related or otherwise as well, at this stage, because people are having a lot of complications even post COVID. So it's not just the few days of COVID and the oxygen, but a lot happening after that. And in general, I think this is a time when it's also when the world is focusing on improving healthcare capacity. So as a sector, this is one of the sectors would actually be counter-cyclical, and therefore could borrow at the time like this. I guess a lot of them would be able to take this opportunity.
Especially given the interest rates would be low, right? Because if the banks are borrowing at the repo rate, so hopefully these companies would get the loans at around, say, 6 to 7% would be the rough estimation.
Right.
Also, as you mentioned, not many companies have been very open about, companies and individuals have not really come forward when it comes to loan restructuring. There was a very lukewarm response to even the 3 lakh crore window that the government had announced, those loans. How, at this kind of a time, do you think this kind of loans and loan restructuring helps, or something like a more substantial income support would be needed for these kind of firms?
See, this time the flexibility to restructure has been given to banks. There is no guarantee by the government, unlike in the first wave, but this time you're giving banks that flexibility. So where banks feel that there are customers who would actually do fine and they could restructure the loans, they can do that, and it is left to their discretion to be able to do that. Not that they have to restructure every loan. even if the borrower is able to pay back or does want to pay back. So this is a different, this is a crisis of a different level and a different nature. So, I'm glad that the response is to give banks a bit more flexibility. Now, of course, at a time like this, one has to see what are the demand side effects, what are the supply side effects. And this is only one measure and one small measure that can improve the liquidity situation. It's not even direct income support, but it can improve the liquidity situation. Now, how effective this measure will depend on how risk averse banks are.
Right. Do you think in the next monetary policy there would be scope for interest rate cuts, given that inflation is around 5%, 6%, but there are growth concerns also?
My sense is that it's unlikely to change, that the rate is unlikely to change, given that, you have to balance between growth and inflation, and both are difficult at this time.
Right. Also, there was this lot of focus of the RBI governor on the fact that things will improve going forward. It was a very optimistic message. How did you read the RBI governor's statement about the state of the economy now and his, expectations about the future?
So I think if you compare this quarter to the last April to June 2020 quarter, there are many very big differences. And because that was basically, most of us were not affected by COVID, where there were very few cases. And the shutdown, the lockdown was on the government's restrictions that a lockdown was put. So suddenly there was a very, very sharp decline in GDP. Now you're not going to see that kind of a decline in GDP. What might happen now, what happened then was that when those restrictions were removed, phase 1, phase 2, phase 3, so by the end of June, you could come back. If you look at the graphs, they actually show you a very sharp V-shaped recovery. But the decline was much deeper, much deeper. Okay. Now you're not going to see that kind of a decline because you don't have those kind of nationwide restrictions. What you have instead are really two things that are going on. One is that people are ill. And so, when it's not that the companies are saying that we are going to impose a complete shutdown, but if workers are ill, if conditions are unsuitable, if there is a local lockdown, so in pockets, you're seeing production being disrupted. But I think on the other hand, what we also have is a sharp demand side shock, which was not so much there in my perception in the first COVID wave. Because we are comparing this quarter with last quarter, really, we can be quite optimistic in the sense that the decline is not going to be so sharp. You're not going to go down 24% of GDP. You're not going to get that. You'll actually, since it's based on the previous year, things will look good, because you'll be growing positively. I have concerns about whether this will be a sharp V-shaped recovery or whether this will draw a bit longer, because initial conditions are much poorer today after a year of bad incomes compared to what they were last year. Many people have drawn down their savings. The sort of mood that happened just after the lockdown, that okay, now we can go back to being normal, we can start investing. Now if you think of investment, then the investment gets affected more than anything else by uncertainty. Okay? And the present uncertainty in the country today is at very, very high levels. So my sense is that perhaps, it's time to be a little more worried than the governor sounded to me.
Right. Probably in the next months, whenever they release the consumer confidence survey, we would see some of that skepticism actually reflected in those surveys.
We'll have to see what people feel and say.
Right.
Maybe I'm too Delhi centric because, being in Delhi and being surrounded by what one is seeing with, 2-3 deaths of people, every day. So you do tend to become, pessimistic. So maybe, I hope I'm wrong about, the demand shock and other places are better. We don't even have full knowledge. But let's hope that's better, and that the RBI will take that into account, of course.
All right. I'll start taking your questions. Sankalp is asking, should we forget about the 11% growth that was predicted this year? We also know that no country got away with this pandemic with just one lockdown. Do you think even the minds at RBI ignored this?
Yeah, I mean, I think almost everybody's now cutting down on the growth projections, 8.5. And remember, this is on a year where it's year on year. So it's this financial year over the previous year, which was pretty bad. The way to think about it is not to think whether we are talking about 11% growth or not, but to think about whether we are talking about getting back to the pre-pandemic levels of output or not. And we didn't expect the second wave to be so virulent. Nobody expected it to be so virulent, neither the public, nor the government, nor business, nor industry. And I think we still haven't seen it play out fully, and that the virus is moving faster, expanding faster, growing faster than the pace of vaccination. And even when, vaccination is not 100%. So I think we need to, be a bit cautious about our expectations.
Right. A question related to vaccines. Ajay Balakrishnan is asking, why is the central government unable to procure more vaccines in the open market? Does it not have the money to do so?
I don't think it's a question of money. In fact, the last episode we did, we talked in detail about the kind of expense that this involves, that a vaccine involves. And it's about, about a percent of GDP, and that money gets spent. My sense is it has a lot to do with the procurement process of government, with the ability of the bureaucracy to place orders and take risks whenever it involves taking risks. So, you think of the US, UK, Israel, they started placing orders for the vaccine when the full trials were not over, and when the regulators had not yet approved of those vaccines. They could afford to do so. Plus, they had the systems which would not have penalized the bureaucrats who, like US was sitting with with the Covishield, the AstraZeneca vaccine, and their regulator did not even approve it. So, if we had a situation like this, just the way we are, the way our system has evolved so far, I don't think many bureaucrats would have felt very comfortable placing orders of vaccines which then would not even have been approved. My sense is that that is one thing that might have held them back, because after all, it's not very hard to calculate that we have, 12 crore above 60, so we need 24 crore doses for them. We have 30 crore people between 60 and 45, we need 60 crore doses from them, and so on. And then 60 crore, so we need 120 crore. So we know exactly, what the demand, our demand would be, our need would be. But we did not place those orders at that time. And then when the need arose to actually, when there was a supply demand mismatch, by then the stocks of the vaccine producers weren't there. They were already sold off. So I think it's not about money at all, because it would be really, foolish to not spend a percent of GDP and lose 10% of GDP. It's about our processes.
Right. Sankalp is asking, why are the oil prices increasing despite the EU and US pushing for renewable energy centric growth? And will developing countries face inflation on account of the infra push of developed nations? He's citing the example of copper prices.
Yeah, so US growth is rising. In fact, people are worrying that US is overheating, because you've had both a large fiscal push and a large monetary expansion. So with the fiscal and monetary expansion, all the predictions for the US economy are that it would maybe grow too fast. So a 6% growth for the US is very fast. Maybe it'll go at 6.5%. So that contributes to pushing energy prices. And to your question of renewable energy, currently renewable energy is not the largest component of the energy consumption of the world and of these countries either. So when you have a large demand, expected demand increase, then it would impact oil prices first. Not, I mean, maybe, if you're talking 20, 30 years later, or 20 years, 15 years later, whenever it is renewable energy, then maybe it wouldn't impact. But as of today, it definitely would impact. If there is an infrastructure push that affects commodity prices, so steel, for example, or other commodity prices, they get affected and they rise. So that is inflationary for us. It does increase, particularly those prices that are globally determined prices. It does increase in inflation for us. Now, because we are kind of out of sync in terms of the business cycle with the US at present, because their economy is on the upswing. They've, given all this, both the vaccines and the stimulus. So compared to ours, they are on an upswing while we are on a downswing. We are different from where they are. So in this set of a situation, when global inflation is rising, there is global inflation. And if we are also, if our currency depreciates because of flight of capital, and I mean, we may try to protect it and prevent depreciation, the RBI may intervene, but if it does depreciate as well, then you have these two factors that will then push inflation, if it does.
Right. A related question to inflation: how big will be the asset price inflation? Will it be mainly CPI inflation only?
Well, currently, the way things are, it does appear to be mainly CPI inflation, because incomes are also not rising. But asset price inflation is very difficult to predict. So what often happens is that, money is searching for assets which yield returns. And if the stock market does well at a time when everybody says, why is the stock market doing so well? Because things are so bad. So why are they expecting the economy to do well? Because the stock market reflects that sentiment that the economy will do well. But often it is also a question of money sloshing around, liquidity sloshing around, looking for places where returns can be high. If bank savings or time deposits, or if bank fixed rates are low, if the EPF rate is low, if you think that you cannot get high returns through other sources, then sometimes that goes into asset price inflation, and that's very difficult to predict. But let's see.
Right. Shivani Mohan is asking, what will be the impact of this pandemic on the financial sector? Basically, she's talking about financial risks, given that people have died and all the measures that have been taken by RBI. Is there a scope for NPAs to increase?
Well, if those people who have borrowed, companies that are not doing well, I'm not sure that the number of deaths is such that it will actually, have such a big impact in the long run. I mean, currently, of course, it does affect sentiment, it does affect family, it does affect work. But in the longer run, I'm not sure that that is the factor. But yes, certainly with the dampening of demand, as well as supply restrictions, businesses could do badly and there could be more NPAs.
Right. Cyril Philip is asking, why has the government not moved on compulsory licensing? Even with approvals, it would take time to match demand.
I am not privy to the government processes. I don't think I understand fully why it hasn't moved so far. This is a good step. I mean, Arvind Panagaria has, for example, written about this and said that the government should go ahead by Covaxin's license. And let's wait and see what is happening on that.
Right. On the fiscal side, Gagan Chaturvedi is asking, will the government be able to achieve this year's disinvestment target?
Well, the stock market might actually support this disinvestment target, but usually governments fail to achieve disinvestment targets. I mean, even when we didn't have these conditions, it was not easy, and those targets were not met. If they do try to push very hard, then given the stock markets at the moment, they could possibly do it. Yes.
Right. Shivani Mohan has another question, and she's basically asking about, what do you think would be, how difficult would be RBI's supervisory role in these current conditions, given the pressures of banks' books?
Well, RBI has not played a very good supervisory role, if I may say. I've written a lot about it. This is not the first time I'm saying it. But, look at the kind of NPAs, look at the scams, look at the Nirav Modi scam, look at what happened even in private banks, the functioning of the boards of private banks. RBI supervisory track record has been quite poor. Now, if now you have more difficult conditions, it can certainly not get any better.
Right. Bishwarup Naiti is asking, does steep growth expectations in the US mean FDI into India might slow down? What can we do to take advantage of the US economy's growth?
See, there are push factors and pull factors. At the moment, you can't even, it's very hard to attract investment into India in the present conditions. Looking forward, when we have better health conditions, when the pandemic is over, then we should go back to the old agenda of doing what we were planning to do, which is to ease business conditions. Not, I don't just mean the ease of doing business as measured by the World Bank, but to actually have a business environment where businessmen don't have to pay bribes, where there are there's less uncertainty, certainly less policy uncertainty. One of the things that has been problematic for India all the way from 1991 about in terms of attracting foreign capital and FDI in particular has been the policy uncertainty, whether it's because of taxes or retrospective taxes or change in environmental laws, our lack of willingness to accept arbitration, international arbitration. I mean, there is a whole range of, it's a very, very long topic, that there's a whole range of issues why FDI, how FDI more of FDI can be attracted. And I'm not sure that the present conditions are very good for that.
Right.
In fact, they might be worse.
Okay. Okay. And my last question, ma'am, what do you think about this whole, surge in cases in rural areas? So far, rural districts were comparatively lesser contributors to the new COVID cases, but now at least half of the cases are coming from rural districts. What does this mean for the rural economy at a time when you have good crops and a forecast of a normal monsoon, but at a time also that the cases are surging?
Yeah, I think the fact that this strain is far more virulent, it is deadly, and in rural India, the health infrastructure is very, very poor. In the first wave, somehow, whether it was because not as many people had the virus, or whether it was because more, they were here while they were for the first 15 days, people were not allowed to go back. Well, I don't know what it was, but in the first wave, we did not see this kind of impact, COVID spreading in rural areas. But I think now it is a matter of concern. While it may not hurt the rural economy, because I don't think there are still conditions of shortages of labor, and because people work out in the open. So while it may not hurt the economy as such, but it will hurt households, it will hurt people. The demand for Manrega has gone up hugely. The April numbers show that it has gone up hugely. And that really shows that part of the urban stress is moving to rural areas. And it is a matter of concern because rural health infrastructure is far poorer than urban health infrastructure.
Right. Thank you so much, ma'am, for taking all the questions. Thank you to all the viewers for sending in all the questions. Do stay tuned to our YouTube channel for more such shows and all the videos that, our reporters have traveled across India and are bringing you stories from the ground of COVID. Thank you so much for joining. Thank you.